Welcome to another edition of Zacks Rank Buy. I am Brian Boland, and I am the aggressive growth stock strategist here at Zacks Investment Research. And I've got two more stocks for your aggressive growth radar screen, and I hope you eat these up. Woof, what a good pun. All right, first one, we've got Portillos. Portillos, that's PTLO. It's a Zacks rank number one. It's a strong buy. It's got a B for growth and a C for value. Portillo's is a restaurant chain that serves Chicago-style hot dogs and hamburgers and all sorts of great food, especially the chocolate cake if there's one near you. There's very few stores of Portillo's, but they do rather well. I remember back in the day when this company went public, I did a little deep dive on it. I think it was like $7 million per day per store in revenue, whereas McDonald's, who has many, many, many more restaurants, did only something like 1.1 million per day per restaurant. So definitely a thing that they need to scale up. But this stock, as we can see from the chart right here, we had a beat at the end of February. Stock came up. It has really come in. Might be time to start thinking about this one seriously as a potential. All right, let's take a look at the numbers that we love to see. Have they been beating the number? They sandwiched in two misses, but they're small misses of 2 pennies, 1 penny, and then back on track with a nice big solid beat of 8 cents. So it makes you wonder why that stock has come in quite a bit. All right, let's look at where estimates have gone. This quarter holding still at 6 cents. This quarter going up to 15, down to 14, so we'll call it holding still the last 60 days. Full year going from 39 cents to 40 cents. Next year going from 46 to 50 cents. But is there growth? And I think that's the key to all of these videos. Is there growth here? And yes, we've got 12% top line growth this year, 13% next year. So a nice growth acceleration. Let's take a look at the valuation. You're paying a healthy 30 times earnings here, but you got 24.5% growth on a year-over-year basis in the most recent quarter. So maybe that 12% is probably light. 1.9 times book, which is pretty low. 1.3 times sales, which is pretty low. Margins moving up from 2.7 to 3.1%. Take a look at the chart. All right, this company came public, and boy, everyone had high hopes for it up in the 40s, but it came right back down. It had a year-long string of beats, missed a couple times, and has come in the beat, and then has still moved a little bit lower. So this one is of a lot of interest. If we look at the earnings estimate lines, we can see they're kind of all over the place, up and down, and started high and has come in. Obviously, inflation is hurting this one, especially food inflation, possibly the idea of workers having to be paid more. All right, it's Portillo's. PTLO is your ticker. Let's go on to our next one, and it's the One Hospitality Group. The One Group Hospitality, actually, not the one, whatever I said before. And the ticker symbol is STKS. So they have a couple restaurants. They've got STK Steakhouse and the Kona Grill. So maybe you've heard of those, but obviously it's a little bit smaller, $163 million market cap. All right, Zacks rank number one, strong buy. B for growth, B for value. Different story here after their beat. The beat down here and was low priced, shot higher and has come back in just a little bit. So obviously I like it on the pricing scale. All right, so what do we want to see? Are you beating the number? And they haven't been beating the number until recently. And we see one quarter that was not profitable. But that was a big miss. That was a bigger miss. But turning the ship around right here in the most recent quarter, that makes me smile. Is that a smile? Put a nose, put an eyes. There we go. Woo, I'm bad at the pen, the marker. All right, what are the estimates doing? Going from break even to 2 cents, that's a up. Going from 3 cents to 2 cents, that's a down. For the full year, ooh, that's bad. 37 cents was 37 cents. Now it's 20 cents and 23 cents. So it makes you wonder why this stock is the Zacks rank number one. Is there growth? Well, we've got 10.7% top line growth this year, 9% next year. I don't like that deceleration, but it's still in the positive. What are we paying for something like this? We're paying 26 times, 2.4 times book. Anemic growth in the most recent quarter, 1.8%. Price to sales, they're not really being granted every dollar of sales for what they're earning. So that is not the greatest of things. Margins slipping just a little bit, 2.7 to 2.34 in the most recent quarter. All right, let's take a look at the chart. And we can see this thing, pandemic, we're all going to die, and we've come all the way back up. Some reason it didn't like the tech wreck, and it didn't like 2023 either. But did we base out at $4 a share? And I think that's very probable that this company can continue to beat. Now, estimates have been trending lower. We don't like to see that. But where are those 2025 numbers? They're right there. So there's a chance that they could start moving up. Another couple beats, and this company stakes the one group hospitality, STKS, could be a very good name. All right, that's it for this week. Be sure to join me next week when I take a look at 2 more stocks for your aggressive growth radar screen. Until then, why don't you go to Zacks.com/promo to check out all of our latest promotions.